welcome once again. So I think we are back to our weekly review. As we were discussing before the call, it's I think it's the start of the year where I think things are again going back to very similar to last year, and we are reviewing where the markets are. A few things which I would like to quickly touch upon is if you are we announced the Investor Day event for February 1st. So we are working on that, collecting a lot of data in terms of macro from various research reports, various, what is the industry, where the industry is seeing 2026. So do sign up for that if you have not yet signed up. And let's get going on our weekly review of where we see markets are heading. So I'll just share the charts, which is usually always easy to talk around. I think from SPX perspective, we are again very flat week where we ended within like 20 points or so from last week. It was, I think, started as a bullish week. We saw some corrections as the geopolitical situation moved, especially around Iran, and how the risks were seen by the market. And I think from there on, we have seen, I think, as that cooled down, as there was seen the risk of US strike came down, market cooled on that fact. And then what happened really is the TSMC, I would say, which really perked up the market with the bounce on Thursday and so on. So I think overall what happened is we are mostly flat for the week, so nothing new. On the other hand, what we are seeing is, and which we discussed last week very much in detail, tech is still struggling. Like tech has actually corrected again this week. Overall, Nasdaq is lagging while SPX is flat. And this is what we call rotational market. Like we are seeing a lot more of, wider cap. Like if you see, there is a very big rally in the Russell 2000, so small caps. This is what the most of the big investment houses are talking about, how the economic conditions improving will help the small caps. And I think that's what is playing out right now. On the other hand, as we always say, right, Ms. Typically the new money allocation doesn't chase small stocks. We have not seen that trend. It's more of a rotation right now. So it will be interesting how long this lasts, because ultimately, if you see the contribution to GDP and contribution of these big stocks is still the biggest. If you look at, even from a bigger picture perspective, which we, of course, as I said, we will cover a lot more in our Investor Day, and also we talk about the macro picture. Nothing has changed. I think this is more of a early year or the end of the year, I would say, rebalancing, and then people looking at opportunities. And then I think, as we saw from TSMC earnings, that the story came back to the AI trades. Story came back to the capex and how much investment they are doing. So let's see how that goes. But technically, I would say right now we are in a Nasdaq correction mode, while S&P 500 is kind of trying to find new highs. The other things which we keep discussing is, as I said, right, there were a lot of concerns about geopolitics, middle of the week, all the discussions around what Iran, US intervention in Iran, and so on. So those are the risks which still remain in the modern environment, as you know. And we have to keep watching how that is absorbed by the market. Overall, I would say the other thing which happened, I think today the yield jumped, which was definitely another negative. This market is attributing this to the comment from Trump about the Fed appointment, the chairman appointment, which is again in question. Earlier, the asset was more or less accepted by the market as the next Fed chair. Today, I think there was this questions raised by Trump on that. So I think the uncertainty on that is affecting some of these yields. And I think this will be interesting, and especially as we hit this 200-day moving average. I'm getting a little concerned, but as I have maintained, we are still in a long-term downtrend on 10-year yields, and we have to watch it carefully. But I think the way things are moving recently, it's definitely markets can get a little concerned about it. This also is a geopolitical factor, to be frank, because people are moving away from US treasuries from international perspectives, and that is, I think, also reflecting in gold and silver. So I think we have seen continuous gold accumulation. Gold is gaining, and it's actually moving every day towards a newer all-time high. So that, I think, is also a big factor. in US Treasury. So I think overall, these are the two things which we have to watch from a macro perspective. But I think in general, what we are seeing is that we are still in similar environment to last year in terms of where we are. And also, I think we have discussed this before. Like we have talked about how things are changing, especially like last year, towards the end of the last year, we talked about how the QT is ending. We have some kind of a pseudo QE going on where Fed is buying those treasury bills. The balance sheets are increasing. The We have talked about how the liquidity was low in October and November period, and now this is the chart of bank reserves in with the Fed, and you can see that it's expanding again. So there is definitely it is a very clear trend which we could see, which is changing. So there's a mix of factors here. We are talking about continuous geopolitical pressure on U.S. Treasuries, where we are seeing more and more moving to gold, while internally, locally, we are seeing change of environment from QT to kind of a QE. So this is, I think, as I said, we will discuss a lot more in our Investor Day event coming up in February 1st. We are evaluating a lot of data, but from a weekly perspective, I think it's a wait and watch markets. Uh, as we discussed, like Nasdaq is kind of not breaking down either. It is kind of underperforming, but it is waiting for earnings, we can say. And as we saw, like Thursday and Friday, especially Thursday, we saw the TSMC really boosting the market. So earnings has a lot of potential to really reignite this rally in tech. And I think that's what we will wait towards end of January, but we have more details coming out. Similarly, I think the bank earnings were great. So already we have some earnings coming in, which are not really helping right now because they are not the leaders in this rally. Now, coming back to, I think there were some questions at the start of the call about gold and silver. So I think, as I have maintained, gold is in a multi-year bull run. It's getting difficult to play here because, of course, it has run up a lot, and especially as if you remember, like last 2 years we have been talking about silver as a great opportunity in the late stage of gold rally. Silver usually goes way faster. We have been maintaining this. If you're part of All Access, or if you're part of our various different events we did, we have talked about this. But now I think when this happens, this gives me a little bit of a jitters. So I would say silver has gone exponential, and also it has gone more volatile. You see that the size of the candles and big corrections are following after every big move. And that tells you that it's not going to be easy anymore. This is not like last 2 years we've been telling you gold and silver are great trades. Now I'm telling you that it's not for everybody. Like this is going to be very volatile. It's going to be very risky because just like it goes exponential, it can come down. And we have seen this. It's nothing to do with fundamentals. Like I'm sure a lot of people are writing about gold and silver right now. Fundamentals existed 2 years back. This is why we were bullish. Fundamentals exist now, but so fundamentals were good when silver was $50. Fundamentals are great even now, but this whole range between 50 and 90, any price is all right for from fundamental perspective. It's a matter of speculation right now. The amount of silver which is traded in paper is 100 or 1000x more than the physical silver. So fundamentals matter for physical silver. They don't matter for paper trading. So when you look at derivatives volume, when you look at all the paper trading, I think that's where the risk remains. So if you are in silver, you can track it as some kind of a stop loss. I would not be a buyer here. Gold, I think, is still in a steady state, and as I said, it's till the China is not done buying, we are not seeing the top in gold. And it is, again, even if it corrects 10% from here, it will still be in bull market. So keep that in mind. The interesting story, I would say, is Bitcoin, because definitely, as we discussed a few times when we met before, and especially last week, that it was bottoming out, and we did see a big move. We are seeing again the resurgence in digital asset treasuries. We are seeing a lot more buying coming in from them. We are seeing a lot more money flowing into the instruments, and I think the flush which happened late last quarter, I think, is behind us. And technically also it's forming a upward facing channel, which is pretty encouraging from Bitcoin perspective. And I think this is another thing which we always believed that it's an allocation issue. Like Bitcoin, there is never a question. Now it is kind of a validated assets. It's still being promoted heavily by institutional investors, like institutions like BlackRock, Fidelity. Now we heard about like Morgan Stanley coming into it. We have a new ETF being launched by them. We have a lot more companies which are launching new vehicles to buy BTC. So the fundamental story remains intact, and this is exactly what happened. Like Bitcoin went kind of exponential last year. It had a big correction, tying up to the story we were discussing with silver. This it does nothing changes from fundamentally when we see, but that doesn't mean that we won't have big corrections, which happened in BTC. So again, the good news for I would say crypto markets, because the pressure on DATs, which we call them as digital asset treasury companies, has gone away now. Most of them are trading at their very close to their NAV, and their fixed income instruments are again getting attractive. And that's where I think we are seeing the Bitcoin getting a good support on this. And similarly, I would say coming back to, like, we also look at volatility. Like, we had seen volatility go down towards end of the year, and as the geopolitics was kind of heating up, we saw we topped out on Wednesday. After we That was the biggest concern. So VIX coming down also tells you that market is kind of getting comfortable again, which was happening, by the way, since the liquidity starting coming back into the market. We were always going towards lower volatility. We were always going towards new highs. And I think, except for this recent spike, which happened purely because of geopolitical reasons, we are going back to the old days of low VIX. So this is very interesting to watch. Market is feeling a lot more comfortable with macro and where the things are. And as I said at the start of the call, right, means when the consensus becomes pretty easy, right, when the consensus is shooting for highs, the usually they're like, everybody is already in the market. So that also means that it won't be easy to trade. And this is exactly what the theme of the market is right now, that you will not find it easy. And this is exactly what we were discussing when we talk about, like, if you look at some of the big caps, right, means I was talking about Microsoft, which is, I would say, the worst performer of the all of the big caps. Means who says that we are sitting on all-time high when you have something like Microsoft, which is one of the biggest cap top three companies, and it has fallen like $100, means maybe 20-25%. So these are the kind of performances we are seeing. Like Meta, it has fallen from 770 to 611, again 15-20%. So we are seeing some really huge corrections in tech in recent times. Even like stocks like Avago and Nvidia, which are the darlings of this AI era, they are nowhere close to all-time high. So while this is a concern that why tech is underperforming, this is also an opportunity. I keep saying that because what it means is we are sitting on all-time highs, or almost close to all-time highs on SPX. And if tech earnings in a couple of weeks start showing promise, and if people start revaluing all these undervalued, or let me not call them undervalued, let me call them corrected tech stocks, we have a huge potential to make new highs. So that's the opportunity. So I would say earnings, there is a lot riding on this earning, which is coming out later this month. And in general, I would say the gold and silver trends are still going on. Bitcoin is reversing, so the liquidity is playing. So as I showed you, the liquidity is catching up in the market, which was pretty low in the last quarter. So, and we are pretty, I think we are in a good domain. On the other hand, imagine that if we have already rotated into wider caps, and if tech has this last hurrah, can that form a new top? That's the question we have to answer as we go along in this year. So that's where we are with the markets. I will take a few questions. And again, as some people came in, I would just like to remind our Investor Day event. As I said, we are going to be discussing a lot more details on the macro. So do check out. I think we had a great time last time when we met in October. So would love to see people coming in and having that. We are writing some investor sessions, including some workshops and so on, like last time. And we are also looking for feedback if you have any specific requests on that. So let me stop sharing here, and let's see if there are any questions in the meantime. And feel free to add your comments on what you are observing right now in the market, and we can discuss further. I see one question here which says, should one be bearish on silver? Yeah, so I think it's a good question. To be frank, means I don't believe in playing a short ever, as I say, right? Means of course silver is a candidate because after it goes exponential, historically, you will see that it will correct. There is definitely a time when it will correct, but the question you have to ask yourself is, if you're shorting, why it should stop at 90? Why not 100? Why not 120? Why not 150? So are you ready to, when things are like, remember that we have a very speculative markets. the derivatives trading is so huge. The amount of speculation which is happening. We are already hearing some banks going almost losing all of their equity shorting silver, and they got liquidated in December. There were all these rumors. So this is not fundamental driven, as I say. The price is never fundamental driven in short term. So you can think of shorting, means it's probably a good trade. But remember that there is no easy way to play that unless you have some kind of stop losses. Means if you're a trader, definitely you can try it out. Means it's up to you. But I would say playing shorts or playing like any kind of short-term trade is always dangerous. Especially as you know, means if you are with Proflex for any amount of time, I always say that by definition, going long is the easiest trade in the world for very basic reason that money supply is increasing all the time. Inflationary forces always make the asset prices go up. So you are basically swimming against that tide by definition when you're short. And if you're going against an asset which is in an exponential mode, means which goes up sometimes 10% a day, then how do you even risk manage that? So that's the question you can ask yourself. And then if you have a plan for that, if you are risking a small amount and you know how to manage the risks, yeah, it's a trade because which will pay at some point, because definitely it is overblown right now. Yeah, please go ahead. You can unmute yourself. Yeah, I think if you have raised your hand, you can unmute.
Can you hear me now?
Yes, we can hear you.
Okay, thanks. So I've seen sometimes as a fundamental question. Sometimes I see these charts correlating money supply with the overall, I guess, overall money in the market, right? So do you have a sense, or have you done any analysis on when these QT or QE events happen? How much
Mm-hmm.
of a leading indicator are they for the money that will show up, all of this money that will show up in the market? I would imagine that there would be a trend, right? That the more money
Yes.
there is, the more money there will be in the market. But how quickly or how much delay is there from these events where the money supply increases or decreases to when it shows up here? I'm wondering if there's an opinion there.
Sure. I think this is a good question. And to be frank, I don't know if I can answer in like a couple of minutes here in this call. We have tried to answer these things in more of a bigger events. But let me try to give a short answer. So, of course, there is no formula. Like if you're looking for, oh, there is a 3 month delay or 6 month delay, how the money comes shows up. Um, so there are two factors onto it, right? So what we call it is a headwind and tailwind, and then you have to overlay other factors on top of it. So if you are generally seeing bullish news, if the money supply is increasing, that means there is more money available in the market, or there is or you can call it whether the money is cheap. Like for example, the rates are coming down right now. So not only money supply is increasing, or money, I would say they are creating the volume of money by providing more reserves and so on, but also the rates are coming down. So there are a couple of factors here. Now within that, when you say how does it correlate to the market at a broader indices, you will always see correlation. You will see SPX probably seeing very fast correlation, or Russell 2000 or those kind of things. But if you're talking about specific assets, like whether it's gold, silver, Bitcoin, or Nvidia or Apple of the world, that depends on 10 other factors. Because even if money supply is available, there's always, we call it as a trend. Because for example, in first 6 months of last year, 2025, if the money supply was increasing, you were seeing the first asset which was getting impacted was Bitcoin, because that was the everything was going into probably Bitcoin at that time, because it was the flavor of the season. Second half of the year, everything you would almost feel like money supply increasing or the situation improving in liquidity is almost immediately impacting gold and silver, especially silver in the late phase. So, but as you go broader and broader, you will see that very much a closer correlation, with us, of course, with some delay, with a few weeks, a few months delay. And then we call it as there are two type of money, right? So we did discuss in October timeframe, if you were in this calls, we were talking about how some velocity of money also matters. So when puts in the liquidity, that goes through banks and that has to go through a whole credit expansion program. when something like a TGA, which is the Treasury General Account, that releases money, that immediately goes into spendable accounts, that immediately goes into much faster absorption of money. So there are a lot of other factors which impact how fast that shows up into the economy. And then the third factor is the sentiment. Like having more or easy money or having more reserves available doesn't necessarily mean that banks are feeling the environment is right to increase their lending power and so on. Ultimately, a lot of this money and the policy impact has the target is how banks loan to the businesses. And so those kind of things are third layer of the factor which decides sometimes whether the money is really getting into the assets or that is sitting in treasury, for example, in a safer heavens. So what we are seeing is right now, as the liquidity improved, as we turned from QT to QE, we are seeing in general, we call it as a risk-on environment, where a lot more people are comfortable. So you will see the money supply impacting the asset prices more in the current environment versus when you have a risk-off environment. But we call it these as a tailwinds. They do show up in ultimately over a period of time because money cannot sit idle, as we have discussed multiple times. There are two reasons. One is when the money supply is there, and when people, when there is more liquidity in the system, there is incentive in capitalistic world to make higher yield on it. Nobody wants to sit in lowest interest rate kind of environment, like 3 or 4%, or now even that is disappearing now. The yields on the safe investments. So money finds its way into risk assets over time. So I don't know if I answered that as expected, but basic idea here is there's no formula, but it's basically kind of a tailwind or headwind kind of a thing when you are taking decisions.
Yeah, thank you, Raman. Appreciate that.
Right. No, but I think it's a good discussion, and I think this is the kind of things which we like to double click because I would love to show a few more charts on how multiple factors come together when asset prices go up. And this is what actually as I was explaining at the start of the call, but we do a lot more in this part of the year when we see a lot more research reports, a lot more forward-looking statements from experts, and we consume a lot of research at our end. So we will be filtering that out and presenting what the consensus view is. But yeah, I think this is, as we can call it, like favorable versus unfavorable environment. And from a perspective of bigger picture economy, we have turned around from, I would say, December last year into more favorable macro. The only downside is that the market has already, this was very well telegraphed, and market was already expecting it. And so the question to ask is whether this tailwind is sufficient to keep us floating higher, or we are already starting now going to start pricing in 12 months later kind of scenarios. So that's what everybody is looking at. All right, please go ahead if there's any other question. You can
Hey,
also put it
Raman,
in chat. Yeah, go ahead.
can you talk about like the whole Coinbase thing where Coinbase, there was news about how
Mhm.
Coinbase did not support some legislation or something going on. I mean, I didn't read too much into it, but I don't know
Sure.
if
I
you.
think that is one of the topics I had noted down in our agenda. So that was my next thing after we
Oh,
discuss the
awesome.
broad market.
Okay.
So it's a good segue into that. So let's talk about that. So this was the Clarity Act. So as this was proposed, so there were two acts. One was, of course, the whole idea of defining what whether anybody can issue stable coins and so on. So which was I forgot the name. There was another act which was passed last year. Clarity Act was the follow-up act, which was it's again, as you remember, Trump won with a huge support from crypto lobby. Coinbase is one of the leaders of the crypto lobby, so they are very influential. Brian Armstrong is actually one of the leaders of that the whole lobby, which was almost a multi-billion-dollar, which went into the election funds for Trump. Now, what happened there is that so first of all, Clarity Bill was defined to help the crypto industry. Basically, they were legitimizing DeFi, which is the decentralized finance, so that that can be separate from banking regulation. As you know, that many stable coins provide, including Coinbase USDC, provide yield, which is on par with your money market funds, and so on. Now, in the latest draft of Clarity Act, bank lobby, which is much bigger than any crypto lobby, they went ahead and they edited out everything, and they basically did not want stablecoins to pay yield. They did not want the DeFi coins to be outside SEC jurisdiction and so on. So basically, they diluted all the positive deregulation for crypto industry. And as it happens, most of these things were done in a pretty much a hidden manner where they basically usually they have a huge bill and they hide these restrictions. And so what happened is at last minute, Coinbase pulled out the support, so it did not pass. My view on that is very simple: that while Trump administration is managing things, the SEC and CFTC both are very much crypto friendly. Nobody needs this bill right now. Of course, bill will be great for crypto industry. It will improve overall the dynamics for crypto industry, but it is not going to change much because at this moment SEC is very benign already. They have a very crypto friendly commissioner and so on. So if you so what was the problem in crypto? The biggest problem was that there was a regulation enforcement without defining any law. That was the biggest complaint of crypto industry. Their Clarity Act is trying to define crypto friendly regulation while there is no regulation today. So uh, so there's no incentive for Coinbase to support this bill till they bring the language back, which is more crypto friendly. Because even without this bill, crypto industry is enjoying right now the very favorable administration versus the last administration. So I think it's a good fight. I would say let's see where it goes. But the very simple fact is, if you remember, Scott Bessent had talked about last year that how multi-trillion opportunity exists for stable coins. So it looks like Trump administration has the vision of growing stable coins, but banks are fighting it because where will the money come into stable coin? It will basically drain out of bank deposits. Because today, when you deposit money into the banks, they pay whatever small interest on checking accounts and much better interest on your fixed deposits or the CDs or money market funds. Stable coins will eat into that if they are paying yields. And that's what I think Coinbase is fighting for. So it's basically a fight between traditional banking players and the crypto players like Robinhoods and Coinbase of the world. Um, I think at this moment everything is crypto friendly already because Coinbase is already paying yield even without regulation. So it was actually a negative bill for somebody like Coinbase. So they are opposing it. So my view is that nothing is changing right now, but and crypto lobby is pretty strong. So it's maybe there will be some compromise, but to be frank, banks have valid concern because say if trillions of dollars flow into the stable coin, now imagine the banking industry in US shifting from the big four banks to somebody like Coinbase and so on. Um, so I think that's going to be the biggest challenge. My assumption is that all these big banks will themselves become very similar to Coinbase. They will ramp up their solutions and then they will approve whatever Coinbase is asking for. In the meantime, I think this is just a bill which is in limbo. But so now to answer the question which matter to people who are investors, hardly there is any impact on Bitcoin. Hardly there is any impact on any of the top crypto. It's a much bigger impact on somebody like Circle, somebody like Coinbase, which is looking to issue a lot more tokens. Um, uh, Big impact on, I would say, DeFi projects. If you're investing in smaller coins, the decentralized projects and so on, but hardly any impact on Bitcoin or Ethereum or something.
All right. Thank you, Raman. That was a good rundown.
All right. So I think overall, as I said, we have talked from Proflex perspective. We are not a big believer in other smaller crypto. They have lost their real meaning in the modern world because of uh, like the way things are going, right? Even the traditional finance companies are becoming like 24 hours. They are tokenizing. They are coming towards where the crypto is. So I think overall the story for us still is Bitcoin, Ethereum kind of platforms which are growing and which I think have the biggest opportunity. But I would say it's not really changing as for them. But Clarity Act means I was associated with the blockchain industry. I've spent a lot of time in the developing things. I think it will be a good progress for the industry. And plus, I would say if Clarity Act passes as Coinbase wants it, I would say that I would be short on banks because means in short term they will lose. In long term, as you know, that they always catch up, right? Means banks can very easily go and acquire some of these platforms and offer the same services. They're not going to miss out completely. But I think in short term, it's a huge positive if Clarity Act pass for in the way Coinbase wants it. Um, so that's my take on it. Let me quickly see if there was any other quick agenda items we had chosen. I think we did talk a little bit about precious metals. As I said, I think the biggest buyer of that means I will spend a few more minutes on
Hey,
that.
Raman,
If you Yes, go
sorry.
ahead.
Before we shift from crypto, can we talk about MicroStrategy a bit?
Mhm.
There's some recovery and what might be happening in that space.
Yeah, so I think I would avoid specific discussion in terms of recommendations. If you are, I think, part of All Access. So we did send a note on MSTR if you may have read it. I would recommend you reading that. But in general, yes, there is a recovery. Not just MicroStrategy overall. If you see, there are a lot more in almost all the digital asset treasuries. The reason being, this is very simple, right? Means there was this whole fight between typical ETF players and MicroStrategy kind of players. And what they did is they did very well to create a dollar reserve, and they basically taken care of all those issues which the short sellers were raising. Second thing is, of course, means the biggest thing is that ultimate leverage which these digital asset treasury companies have is using debt to go and buy Bitcoin and overall create yield for their common stockholders. So the best thing which you can track is right now we are seeing the money flowing back into the that fixed income instruments. Last week, MicroStrategy bought 13,000 Bitcoin. We are expecting this week to be an even bigger purchase because the debt instruments have started working again. So as soon as the demand is back into the debt instruments, that tell you that the whole model is working. So fundamentally, the cleanup happened, or let me not even call it cleanup. It was almost an attack on all these treasury companies from the institutional players. They managed to create negative sentiment for a quarter. They managed to suppress the price, but fundamentally, they are able to continue delivering what they promised, right? Which is the yield on Bitcoin. So MicroStrategy is back because of that. And then, if you are, as I said, we have sent a detailed note on MSTR for all access people who are part of that.
Thank you.
I think I see another. Let me take a related question. So it says why banks could not take out MSTR. I would say it's very simple, right? Means they could not take out because they cannot liquidate them because they have. Michael Saylor has done a good job of defining the debt in such a way that it cannot be called. You cannot force liquidate or force sell any of the assets of MicroStrategy. So none of the debt is enforced. Like it's basically MicroStrategy holds all the cards. That's how they had defined it. And second thing is overall, I think the way he has created preferred stock and so on, and paying on a kind of a monthly yield, especially with the STRC and so on, that is really very attractive product in the upcoming macro cycle. But I think overall, it's you can dig into each company's structure. We always believed that MicroStrategy cannot be liquidated. And I think it is, yes, the premium went away, which was the success for many of these institutional players who wanted to demonstrate that it is the enthusiasm went away, which is when it in itself it's a success for them because a lot of people got turned off from MicroStrategy towards the end of the last year. But I would say that is in then itself is a success because otherwise the ETFs were really struggling to attract cash because if you can always go to MicroStrategy which can deliver better than ETF results, now people will be more scared because of the drawdown which happened last year, and I think that is the best they can do. Otherwise, they are valid products. We have done enough analysis. We have shared that with our all access participants multiple times of why we believe in these. But again, I don't want to go into recommendations here. This is a public call. So again, disclaimers, none of these calls include any recommendation to buy any of the stock. So my legal will be all over me if I'm not talking about that. Okay, so I see another questions here. Has anybody in the group moved money from banks to stablecoin? What's the benefit of that? Yeah, it's a maybe question to everybody, but let me try to answer. I think overall it's a matter of the way stablecoin works. They are blockchain based. Means if you have used stablecoins, you can transfer, like wire transfers are very costly as well as time taking process, or ACH and so on. You can transfer within seconds a stablecoin to somebody's account. So it's a much better technology. It settles immediately. It's a yield earning product. You can immediately deploy it on Coinbase into Bitcoin. You can sell it anytime and convert it into USDC, and you can, while as when you hold USDC, you are earning yield on it, and you can transfer out at an instant without waiting. So these are some of the benefits I can tell you. But again, there's a lot more of that. Overall, it's a matter of whether you believe in, like, it's a matter of when people said, okay, there is a Uber versus yellow taxi, means some people are early adopters of technology, which is seems risky, which has doesn't have the same regulations around it. And some people feel like, oh wow, these are great features, it's cheaper and so on. So it's all about whether you are adopting this new technology. One thing is for sure, that stable coins are technically better product than bank money. And it's a matter of whether you feel safe enough to use them.
So a quick follow-up on that. I
Mhm.
understand in terms of forex transfers, especially to any developing country. But
Mhm.
even then, the off-ramp, finally, you need to spend in local currency, right? Unless you can buy and sell things in stable coins, you need to make that switch from a stable coin to a credit card, a stable coin to a, cash. And that requires fee. So,
No, no.
no?
So let me explain you. There are two things. Coinbase allows USDC to dollar conversion at zero fee, and it's instantaneous. Secondly, they have a credit card attached to your account, which you can pay, not just credit card, debit card. They have the whole features already launched a few years back. So stablecoin has already solved most of these problems which you are highlighting. Um, so yes, that was the problem initially, but I think almost every company, like I think recently somebody shared a news that even Robinhood is now allowing depositing stablecoin, where you can use the stablecoin to purchase stock. So it's basically a much superior product than bank credit or cash. And one primary reason being, it is real money in your account on blockchain, dollar to dollar. And with the latest bill, which was passed last year, every stablecoin issuer has to have proof of reserves on, in US Treasury, 1:1. So it's basically a great, way to deploy your capitals. And so, but I would say it's still a product which you can directly spend from. Today, if you put money in most of the places other than Fidelity, money market funds, if you put earning 4% or 3%, whatever it pays right now, in fact, that is where you have to have conversion. Like it takes one day to convert and to spend, which issue does not exist for stable coins if you're doing it in Coinbase. Again, I'm not recommending, again, a disclaimer that I'm not suggesting everybody to go and deposit their money into Coinbase right now with this. But technically, yes, I can tell you that whatever you can think of, they have already solved those problems. And most of these things are ready to go full steam. And this is exactly why bank lobby is scared of them, right? That's why they are opposing the yield on stablecoin, because that totally kills banks, because it has solved all these issues. It's basically a superior product, and it is almost all of the money. In fact, if you look at Bank of America's note on Clarity Act, they have literally said this. The reason why they're opposing it is that trillions of dollars will flow out of banks. So they are actually almost accepting in their note on Clarity Act that Clarity Act will uh, kill the banks as they are defined today. And that's, I think, the biggest risk. This is why the bank lobby is fighting Clarity Act. So, but I think if any of these issues existed from usage perspective, banks would not have worried. They would have easily said, okay, go ahead and do it. Who will go and lock their money? That's not the case anymore.
There was a news about a stablecoin that lost its value about 6 months or so back.
Hmm.
I mean, I don't even remember what that was, but I mean, you
Sure.
might know if you have any thoughts on that.
So for this, you need a lot of knowledge of crypto industry. So what is happening there is there are two kind of stable coins. Okay, so first of all, let us be very clear what is a stable coin, right? The way this is why the last year's bill, which was introduced again, I hope I remember the name, but there was a separate act which was passed last year, which defined stable coin in a regulatory manner. Um, so stable coins in crypto world are defined as a kind of a synthetic coin, and one is a real stable coin. So USDC is kind of a coin where every USDC issued is basically based on a dollar deposited, and that dollar deposited is a regulated entity with the stablecoin issuer like Coinbase or Circle, basically in this case. Coinbase and Circle are partners, and so let's not get into that. Now, what happens is what when you talk about those coins which lost value, they were synthetic stablecoin. They basically there's no dollar deposited for it. Those are collateral based, so those are usually DeFi based, and there are tens of projects which launched in last 4 or 5 years. That's a little more advanced product to discuss here, but crypto industry has done a lot of synthetic products, and those, if there is no one is to one collateral for dollars, those can lose value. Now in USDC, the promise which Coinbase gives you is that any moment you have USDC in the Coinbase account, it instantaneously within a few seconds converts into actual dollars and you can move the money out of Coinbase. So if it loses value, you would simply buy it and it automatically, it can never lose value just because of the arbitrage. Because Coinbase is giving you one is to one, and they are by regulation they're supposed to have the assets held in treasury for whatever, so USDC, not exactly Coinbase, but actually Circle. Circle's responsibility, which is issuing the stable coin, they have to have the US dollars treasury bills. So this is where I think the difference is. So if you have read that news, that was mostly with relation to I think one of the Binance stable coins, which they have a synthetic USDE or something. And in those unregulated markets like Binance and so on, this is why Binance does not operate that in US. That was not a US stable coin. That was a stable coin operating in China and so on.
Oh, okay. All right. Hey, thanks for the rundown.
Yeah, no, I think crypto industry did a lot of decentralized finance experiments in last 4 or 5 years, especially after COVID. As I said, I was very actively involved in that, and I still believe there's a lot of potential for that. But I think yes, the mass market is not ready for it. So there are a lot of great experiments in decentralized finance. Um, the logic is very simple, right? Means banks by nature, a lot of banks have failed a lot of times. Means they don't even have the cash which you deposit, right? You know, understand the whole fractional reserve concept of the banks. The same thing when applied in crypto gets a negative news because yes, there are crypto projects which fail. Uh, I would say most of the crypto projects, even the most irresponsible ones, are not any more irresponsible than what banks have been doing with the money. That's my personal belief. Again, not nothing. You don't have to go by that. But of course, when you talk about safe money, regulations are still great. I still believe that regulations are useful for most of the people who believe in the superficial knowledge, which is great. Like not everybody has to go deeper into technical product of finance. Means you don't have to understand how banks operate. You simply understand you can put your deposit in, you can take loans from bank, all that works, and that's why regulation exists. So I think what we are seeing right now in last few years is that there is a regulation coming together while the technical innovation is still continuing in crypto, and some of the overlap product which can be regulated in more standard world and banking manner, those are becoming uh, you know easy to access, and that is what I would say USDC and all these are. Again, I'm not trying to promote that here, but all these things are very exciting, I would say, in terms of how things are going to evolve. We are already seeing a lot of discussions around tokenized securities, 24-hour trading, fractional stock trading, all those things happening over blockchain and so on. So these are all great innovations. I think I don't think we are far away from stock markets operating 24 hours a day. Already you see after hour markets and all that. But I think that will become even more transparent when these happens over on exchanges and not in a closed books of Robinhood, which has always been a problem, right? Means somebody who is selling your order book to their clients is not the right place to trade extended hours. you need more regulated exchanges running with overnight trading and so on. So all these innovations are happening because I think those are the exciting parts. Stablecoin is an exciting part. Banks have been not paying the yield which they earn on the dollar. All the profits is going to bank are at risk, but also it's a ultimately benefit to the consumer when all these yield making coins are available, just like bank deposits. So if your checking account can pay the same as money market funds, that's the goal of Coinbase, which I support. Right now, I think checking accounts don't pay you anything just because the banks are making money on that. So that's the difference. So I think that's where it's going to be a good struggle between banking lobby and crypto lobby, and we will see how it evolves. But okay, I think I had a quick comment. So I think we did discuss. So any other question, let me know. I think we'll move on to a few more comments about the precious metals. So I think we do have a lot more details planned in our investor day. But I think one thing I wanted to show is um, the important part of dollar. And I think I had the chart. Let me just share quickly the screen. Um, so there is a big thing which now precious metals are very much correlated with the dollar values across the money allocation world. When you talk about big institutions, usually you will see that they track the dollar DXY index and so on in terms of where dollar is heading. So one big thing which we are seeing right now as the gold and silver are rallying, that dollar is kind of bottoming. So this can actually also put a negative pressure on precious metals. So be aware of this. We have seen the first time we are seeing some kind of a breakout. I would still not call it a breakout till we actually exit this level, which is the 100.2 or so. Basically, these tops where it has always returned from in last almost 1 year. We have seen multiple times it has gone up to 100. But if you see the big things which changed, like after Trump win, dollar had accelerated, and then all the tariff drama and so on brought the dollar down. Right now, I think if you look at long-term averages, dollar is still in a very much uptrend. This is what people forget to do, which is zooming out. Now, if you zoom out, it has actually taken a long-term support here. You see here, this is the trend line. So not only it is looking to break out from the short-term trend line, which is the last 1 year, it's also looking like taking support. So dollar will probably not devalue from here if this trend maintained. And I'm not talking about almost 15, 20 years trend. I'm not talking about 1 year or 2 year. So if dollar retains this trend, and if you look at some reversal, which can have very huge rallies over a period of couple of years, this will definitely have a negative pressure on precious metals. Because one thing you need to understand is that as we are entering this whole deglobalization era, this was this has not, like, people are trying to explain that it is permanent, the dollar going down is permanent, but remember that we have seen these kind of corrections, and there are cycles. It's not necessary that all these corrections don't result in a rally in dollar again. So it's very much possible the dollar can rally again. What happened after COVID means it was a huge rally as the rest of the world struggled. So if this happens again, I think we will see a lot more money coming into US assets, a lot more money maybe flowing out of gold and silver kind of assets. So just watch out for that. So this is one risk factor for commodity rally, I would say, as dollar reverses right from here. So this is one comment I wanted to make. And similarly, we are looking at many other things, some of these data points right now as we prepare for the investor days. We are going to continue discussing these things, but I would say the big picture view is very interesting. It's getting very exciting, I would say, for us, because the last 3 years, it was all about trying to catch up with the market. It was about markets are going as fast as they can. And I always struggle, in a very, very bullish one directional market. I would say it becomes more interesting when you have, these not so easy markets, and you have to go through, some kind of additional layers of analytics on top. And this is where I think this excites me as a, as a student of macro. And I think I would love to discuss this and how we interpret data and how we apply that into trading. And I think this is, I think, what I want us to spend time on, and would love to capture your questions. If you are coming to the event, do feel free to send us feedback on what you would like to see based on, means I'm sure most of you who are coming or who plan to come have already attended some of our events. So I'm looking forward to some feedback because we have time to add more things to agenda if needed. So that is just last one comment before we call a day for today. But I think overall, yes, as I said, we are in the last phase of probably some of these commodity rallies because risk assets are back again. Some of the high value stocks probably will not do as well because we are sitting on a huge bull run. So we keep discussing why it is going to be a K-shaped market. So be careful. Um, as I say, always zoom out. Very important to zoom out because markets will look like they're going up. Markets will look like, and that we have a very similar situation in 2021, 2022, in the late phase of 2022 when market started correcting. Lot of before market tops out, you will see selective performance. You will see some of the stocks going up way faster than others, and some of them underperforming. We are seeing some of them happening, like we look at Microsoft of the world and some of the Meta of the world, and then you see Google and Micron of the world which are going up. So market rotates into these, and keep paying attention to that. If you are active trader, if you are an index trader, I think it's much easier, I would say, because yeah, tailwind is in your favor. It's much easier to stay in the index. But if you're active trader, just watch out. I think because this will not be easy market like last 3 years where everything went up. That's all I can say. And that's the theme of this year. We will keep talking about it. And I'm happy to take up more and more questions in that regard of how to interpret the data. So thanks once again, guys. Have a great weekend, and we will keep posting the event link if you haven't seen, but I'm sure you can find it in your mailbox or in WhatsApp. Thank you. Bye bye. Have a nice weekend.